Welcome back. Let's give you a picture of the markets. Markets in Asia higher despite global investors selling off in the Chinese property sector. China's troubled property sector is being closely watched after most major stocks rallied. So the Hang Seng in Hong Kong down 0.33% on the mainland. The Shanghai index in China ending flat. Japan's Nikkei 1.5% higher, however, at the close of trade. Over in the US, stocks closed barely changed on Wednesday. Yesterday, as investors weighed Fed Reserve officials' recent comments for any signals on where interest rates are going and focused on the direction of Treasury yields. The S&P 500 basically flat. The Nasdaq Composite, also the Dow Jones Industrial, fell 0.1%. The JSE is weaker today. The all-share index down by 0.2%. Let's bring it up and see those points there. 72,325. Industrial 25 index is down. Financials down. Markets in Europe trading higher. So we are standing out a little bit, but the FTSE in London shed 0.2%. The CAC in France up and Germany's DAX flat. Looking at commodities, gold is trading at $1,947, platinum at $867 per ounce. The price of Brent crude oil is still around $80.37 per barrel. The rand has been trading around 18 rand 58 to the dollar, significantly weaker. 22 rand 85 to the pound and 19 rand 86 to the euro. So the JSE in the red once again, the rand down. Markets are hoping for some clear direction, of course, on the path of interest rates in the US from the chair of the Fed Reserve. Let's speak to Ricardo Smith, who's the Chief Investment Officer at ABSA Investments. He joins me now. Ricardo, so we were hoping to hear from the chair, Jerome Powell, yesterday. Then he said nothing.
Yeah, for sure. I think, markets are eagerly anticipating what Jerome Powell has to say. It's certainly driven and shaped market performance this year and also shaped how other reserve banks across the globe, including our own, have responded, which has had a huge impact on our various economies.
So what is the message coming out thus far? It seems like there's not a clear consensus, but possibly a murky consensus that the Fed may hold off on interest rate hikes. So it may be the end of the hiking cycle, but it won't be cutting. Or is it too soon to tell?
I think we are, roughly at the peak of the rate hiking cycle. If you look at the previous couple of meetings, there've been a pause. We've seen pauses across the globe as well, MPC locally, Bank of England, European Central Bank. However, if you look at the Fed projections and expectations of interest rates, there is certainly room for one more rate hike before the year end. But it does appear we are at the peak of interest rates. The big concern for markets at this point in time is when will Feds, begin cutting those rates? And the fear is that they may stay higher for longer. And one important factor to actually consider with interest rates is that their economic effect tends to lag by a couple of quarters. So we're actually still going to experience some of the effects of the rate hikes that we've seen.
And this would be important for South Africa. Of course, any indication of an interest rate hike or higher for longer, because we often follow the US. And also talk about the rand. How may it possibly react to what Jerome Powell says?
So from a South African perspective, the bulk of the inflation that we are experiencing is imported, through currency fluctuations. And so maintaining real rate differentials with some of these developed economies, in particular the US, becomes, one of the utmost important things for the Reserve Bank locally to do. And what we've seen with the tight monetary policy in the US, we have seen quite a lot of dollar strengthening. And so we would look to hopefully reverse that as monetary policy normalizes. In the short term, we do expect a lot of volatility in the currency. However, looking at some of the longer term trends, we think the trend deficits on the fiscal and current account are likely to put some long-term pressure on the rand, but certainly more moderate than what we've seen. So there is room for some strengthening with policy normalization and with risk-on sentiments, just that the near-term horizon does have elevated risks and fears of a recession, particularly with where interest rates are.
All right, so those fears remain. Let's look at a specific sector on the JSE, which is down again, and it was down significantly yesterday. Is that all because of dollar strength, which affects the miners? And the miners under huge pressure. We hear today that in September, production contracted again, really showing the pressure that they are under.
So there's a couple of factors, I think, that are playing out there. Globally, 100% right, these are dollar-denominated commodities. So when we see excessive dollar strength, their prices in dollars does come down. But, however, on the other side of that coin is that when they do repatriate those revenues back home, converting them to rands, they get a bit of a benefit. But what we've also seen is cooling global economic activity, particularly on the manufacturing side of it. We've seen disappointing economic growth from China, so disappointing recovery from their hard lockdowns, sideways movement in their property sector. They are one of the largest, in fact, the largest single consumer of commodities across the globe. And then locally, some challenges, including, the energy crisis that we've had, as well as, railway issues, having to depend on, roadway for freight travel in terms of exports and, out of the ports, and quite a huge backlog there. So there is, a myriad of challenges, and one factor to put into context is that the last couple of years, in particular last year, we saw a commodity super cycle, and so we saw record profits from the mining sector. We saw revenue overshoots, from the corporate checks from the mining sector. So there is also an element of normalization of that cycle amongst these other factors that are playing out.
Finally, what you're saying, the problems you've raised are not easily fixable. So are we looking at a long-term problem? Because of that super cycle ending, we're seeing tax revenues already off significantly. So is it going to be a potentially gloomy few years?
It all depends on how, government responds from our side. So we can only control what we can control. We can't control, the global economic cycle. We can't control Chinese policy and, their zero COVID policies and, when they choose to implement them. But from a South African perspective, energy crisis is one thing that we should be spending a lot of that excess tax revenue that we generated towards fixing that. Fixing up the railway, we need a healthy balance between, traveling by road and traveling by rail. At the moment, we've seen a downward trend on railway and a lot of influx on the trucking side, which has caused more problems, for the mining sector, which really is dependent on railway. So I think that infrastructure element of it, we've got a competitive advantage from an African perspective, having some of the most advanced infrastructure, but we've been hammering it over the past couple of years. It's not an easy problem to fix. It can't be fixed overnight, but we need to start making the right allocations into the right kind of projects.
All right, thank you so much. Ricardo Smith, Chief Investment Officer at ABSA Investments. And that's where we wrap up your market. We'll wrap up the show after a break. More to come.